Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Justin Nielsen here with a look at the action in today's session, where we got a bounce after a weak session on Friday. There was one area that wasn't quite swimming in the same direction, but we'll dig a little deeper into the action today and a couple of stocks on our radar.
Yeah, so we'll go ahead and take a look at Lam Research and the chip equipment makers, and also Moody's, one of the former long-term leaders that was also setting up, and finish off with Zim Integrated Shipping.
All right, let's do it. First, let's check in on the major indexes. Here is the NASDAQ Composite, which gained 1.9% today, followed by the S&P 500 with a gain of 1.3%. The Dow gained 0.7%, but the Russell 2000 down 0.2% for the day. But great to see the NASDAQ getting back above the 21-day line today, Justin.
Yeah, so kind of the next step that we want to see is for it to stay up here, right? This is just one day, just like Friday was just one day. And, one of the things about Friday is, look, it was a half session. It was digesting some news on what is arguably one of the lowest volume days of the year. I mean, when you only have half a day, a lot of people just skip the day after Thanksgiving. So it was kind of a day where the news could have maybe a exacerbated effect. I think certainly there was an aspect of, look, Biden saying there's not going to be lockdowns and shutdowns, this time around. Maybe that, kind of made people feel a little bit more secure, but certainly what was really driving the market higher was the tech names, especially the big tech. But as you mentioned, the Russell, and it's worth looking at the IWM, which is the iShares Russell 2000 ETF. This one got below the 200-day moving average line on Friday, and it stayed there. So while a lot of things were rallying today, the Russell was not participating. And on IBD Live this morning, we were really questioning the breadth at the beginning because my initial figures, despite the bounce in a lot of the indexes, the initial figures that I was looking at showed the decliners far outnumbering the advancers by like over a 3-to-1 ratio, it looked like at the beginning. But that seemed to even out later on in the day. So again, it's one day, but this is certainly a little bit heartening to see that there is support here.
Right. And to put those advancers and decliners into perspective here, this is the trend that we've been seeing in recent weeks, which is that declining breadth. So something that we've been keeping an eye on for sure.
And when you see it, when you see the new highs, when you see the index go to new highs and that line going down, it just tells you that, look, it's narrow. And this is something that we were seeing earlier this year, where it was the NASDAQ was really being driven by your heavyweights, your $1 trillion club, your Microsofts, your Apples, your Teslas, and so on.
That's exactly right. And a quick check-in on growth stocks as well. Bouncing today with FFTY, the ETF tracking the IBD 50 index, of about 1.7% for today. And that follows a decline of 5.8% last week, Justin. So a disappointing last couple of weeks for growth stocks.
And if you go back to the daily, it's worth mentioning that there were some cracks in some of the growth names beforehand. So, I mean, Friday's action, while it was bad, there was even worse action, on Monday, and prior to that, you had a gap down. So there was already, something happening in some of these growth names. Now, again, tech was one of the leading areas today, but it's a little bifurcated. It's not everything is participating. You have some of those high flyers like Asana. We were talking about Upstart and all of these that were big winners that have really just been clobbered in the last few weeks. And so that's what you're kind of seeing in the IBD 50 there, that some of these growth names there, and it looked like there was some rotation happening too. But it definitely depends on where you're at in your portfolio. It's kind of back to that whole stock pickers market. One more thing I want to just share that I was bringing up in one of the meetings that we had today is if you go ahead and take a look at SPY, which is the S&P 500, the Spider ETF that tracks the S&P 500. This one's back above the 21-day moving average line. Dipped below it on Friday, but just to kind of give you a sense of how the market cap weighted is really benefiting the $1 trillion club and such. Go ahead and pull up RSP, which is an ETF that does an equal weighting of the S&P 500. And you can see that there's a very different picture here. You know, that this one came all the way down to the 50-day moving average line. And while it bounced today, it's still below the 21-day moving average line. So it just kind of gives you a little bit of a different picture on the S&P 500, showing you that if you weighted it differently, if you weighted everything equally, and these are still very big cap names, right? It's the top 500 in the country. It's very different when you do the market cap weighting.
A great perspective there, Justin. And now let's take a look at LRCX, Lam Research of the Semiconductor Equipment Group, breaking out to new highs with a gain of 6% today in above average volume. And this nice run that the stock has been on since its earnings report in mid-October has been accompanied by some heavy volume to the upside.
Yeah, and that's one of the things that you really like to see. Personally, I probably would have preferred just a little bit of a break here. I mean, we had a 2-day break, support the 10-day moving average, not the 10-day moving average line. Yeah, the 10-day moving average line right there. It had crossed a downtrend before, so arguably you had an early entry. So it feels a little extended to me, so you have to be careful of that, but it was certainly a strong day, getting to new high territory and crossing, that previous high of 673.90 if you add 10 cents to it for your buy point. So it definitely cleared that. And the volume was tracking a little bit lower throughout the day, but it certainly seemed to come on pretty heavy at the end, and a nice move of 6%. So something to be keeping an eye on. This group is something that has been, I think, showing a lot of strength, the Semiconductor Equipment Group. So worth keeping on your radar.
Okay. And let's also look at MCO, Moody's, which had a nice gain today.
Yeah, so this one is one we put on Swing Trader because it was kind of breaking this downtrend a little bit. Here again, we saw some really, really spectacular volume on the move today. It's not just that it was above Friday's half-day session. This was well above average. So here you had a breakout, kind of pulled back, and that's very normal. We talked a little bit about this on IBD Live, how 40 to 50%, this is from Bill O'Neill, 40 to 50% of the stocks will break out and then pull back to the entry. That's very normal action. What we were talking about not being normal is something like Upstart, where people might be saying, oh, look, well, it's pulled back to the previous breakout and got support there. Well, yeah, but you had like a 100% move, and now you lost half of that. So that's not the same thing that Bill was looking at. It was more of these moves where you were at 5% or something like that, and or less, and you just kind of lost those gains, got support, and then you were a lot of times able to move higher rather than a round trip of a solid gain of double digits that turned around, so, or triple digits in the case of Upstart.
Yeah.
But this is one that if you go back to the weekly or the monthly, you take that long-term perspective on it, and it can be a very slow mover. We talked about SPGI today on IBD Live as well, but it's got very stable earnings, pretty robust when you look at it. Both of these are their earnings stability, which the lower number is better. They're at 4 and 3, but their EPS growth rate annualized is roughly 20-21% for both of those. So certainly it can be a slower mover, but over time, these can really provide some good gains for you.
And after you see a pullback and a rebound is typically a good time to look at these long-term leaders. Let's see, it's about less than 4% above the 10-week line at this time. Yeah,
so ideally what you would be able to do is maybe use that 10-week line as your stop at the start, but then once you get some cushion, you can switch to the 40-week moving average line a lot of times on these. So you can really give them a lot of room, because they just tend to hold very steady when they have that earning stability that low.
Yes. And shipping stocks were looking pretty good today, especially Zim Integrated, up 8% today in some above average volume, reclaiming this 55.60 entry. So yet another example. This was an early entry, but it cleared the early entry, pulled back, now breaking out of that early entry again.
And you mentioned the volume before. It's really worth looking at the volume on this one. Look at how heavy that volume was, especially after the earnings. You'd expect some heavy volume there, but it remained heavy. And then on the pullback, it lightened up considerably. So again, you look at it on a comparative basis, very heavy volume on the upside, a lighter volume on the downside, and now here we are, that volume, driving heavier than it was the last few days on the pullback. So that's ideal volume action in my mind. This is one that held above the 50-day moving average line. So I think this is one of the stronger ones out there. And you had a lot of the shippers moving today. We've been talking on IBD Live about Star Bulk, which is SBLK, and what is it, Gold Ocean, GOGL. So you had a move that was happening across the industry. Zim just happens to be in a little bit of a better position, I think, because it's above its 50-day moving average line already and has been there for a while.
Looking a bit stronger. All right, Justin, thank you so much for all of those golden nuggets today. As always, we appreciate it. And thanks to everyone for tuning in. We'll be back, of course, tomorrow morning with more on IBD Live, where we are joined by David Ryan, our special weekly guest. So take a look at investors.com/IBD Live if you haven't yet. We'd love to see you there and interact with you if we can in the Q&A. That's always fun. So we'll see you there, and we'll also see you right back here tomorrow after the close.